I'm going to teach you everything that there is to know about the volume profile in the next hour.
This is the volume profile, and it can give you precise sniper level entries for your trades.
In this video, I will show you probably the best trading indicator out there. And it's not one of those technical indicators like RSI, MACD, blah, blah, blah. It's literally the money indicator. And this indicator is called the volume profile.
You have probably seen a lot of volume profile videos on YouTube. And yeah, most of them cover the same things, from basic information on what the profile is, how it works, to more advanced things like B shapes, P shapes, D shapes, trend days, balance days, composites, all of that. And to be fair, those concepts are real. But here's the problem. Most videos stay too broad. They explain the volume profile as a concept, but they don't give you clean, repeatable setups you can actually look for every single day. There is no single volume profile. There's a monthly profile, a weekly profile, a daily profile, a session profile. Even every candle has a volume distribution. Some of these people even randomly define their volume profile based on nothing really. For example, this clip from Casper SMC.
And just for simplicity's sake, we'll use the fixed range. So to find this, you can go on TradingView. You go over to where you would place a position tool. So like if you're placing a short or a long position, and then you're going to go down to either the anchored volume profile or fixed range. So bear with me, and I know this is going to look complicated, but it's really not. We're going to go over what this stuff means, how you can use it, and where the edge is inside of it.
Well, yeah, if you're using a volume profile based on this, which is nothing, there's really no edge to it. So you need to define your profile based on something that actually has an impact on what you're trying to achieve. In my case, and probably yours as well, it's day trading, more specifically intraday trading. And that's where I use the previous day volume profile. And that's exactly what this video is about. As you have probably noticed from the beginning of the video, a lot of people use volume profiles that look like this. Way too detailed, too noisy, and not very useful for fast intraday decision making. I'm a day trader. I trade futures, forex, and I really don't like holding overnight. The shorter and cleaner the trade, the better. So first of all, I use a very specific profile, the previous day volume profile. Because for my trading, I'm only interested in what the market did in the previous 24 hours. The more recent the data, the better. Positions opened 2 months ago are statistically a lot less likely to affect today's price action because they could have been closed at any point and we simply don't know. Secondly, I pay attention to the tick size of my profile. So these blocks here, they change based on the tick size. So compared to the profiles that you have seen in the previous part of the video, my blocks are very thick and there are not a lot of them. I use a higher tick size setting because it lets me see what really happened. It doesn't dilute the profile with unnecessary information. It allows me to ignore noise and make better decisions faster. Alright, so let's get into how my profile works, the component, and what I do with it. So just like every other volume profile, I have my point of control. I have my value area high, and value area low. But additionally, I also use the previous day low and the previous day high. So in order to get my indicator, you will open TradingView, you will go to indicators, and you will search for auto detect profile, and you will click this one from Prater 18. You add it to your chart, and then you can the settings already work. Like I've made it so the settings fit for basically all instruments, but in some case it might not fit for example for some crypto altcoins. It might not look good. For example, for BNB it doesn't look good, like you can't use it. But I don't trade BNB, that's why I haven't optimized it for it. But for major cryptos like Bitcoin, Ethereum, Solana, Japanese index, any JPY, basically anything forex, gold, basically anything most people trade, it works for The link to the indicator will of course also be in the video description, so you can check it there. Now, where does this approach come from? A big part of how I think about it was influenced by a guy named Patrick Nill. So this is him. The guy is a German trader. He has been trading for a long time, and he has also won multiple trading world championships. A lot of people, or most people probably, have never heard of him because the guy simply doesn't post a lot. If you search him on YouTube, you will find a couple of interviews, but most of them are in German. And other than that, he doesn't have a YouTube channel, he doesn't post anything. So there's nothing about him on YouTube. You can find his LinkedIn, but yeah, nothing is there either. Just here's an article for a trader meeting that he did in 2022. And of course his Twitter, but all he does here is to repost things from other people. So he himself, he doesn't really post anything. He doesn't really have a media presence. So he's not someone posting YouTube tutorials. You won't find his approach explained in a simple how-to format online or even at all. In this video, I also, of course, won't share his entire approach. I will share what I found the most valuable and how I adapted it to what has already worked for me and how I understand the market. I was already using several sophisticated volume-based methods before, but this framework generally changed the game for me, especially when I'm outside and I either don't have my order flow tools ready or I just don't feel like using them that day. His framework is basically just as good. It really enables you to get order flow grade entries from anywhere. All you need is ideally a tablet and a volume profile. So let's get into it. There are 4 main scenarios that I trade, but I always look out for the same things. I look out for where does price open? Is price accepting or rejecting values? Then I use the fixed range volume profile for take profit regions that we're targeting. And then lastly, I use the kind of market we're in. So if market is going up, I will of course only be looking for longs. If market is going down, I will always be looking for shorts. So the previous points should be coherent with the bias of the current market structure. So for our first scenario, this is a trend continuation or rejection of prior value setup. Price opens completely outside or almost completely outside the previous day value area, or sometimes even outside the whole profile. And if price fails to get accepted back inside the value or our profile, that's important. It means the market is not interested in rotating back through yesterday's fair price. That basically gives me a continuation setup. So let's look at what happened here. This blue line here marks where today's trading opened. So price was up here, basically opened at the previous day high, traded down a little bit just below this high volume region, and then we pushed above it immediately. We pushed above it, pushed above the previous day high, retested it a little bit, and then we continued higher. And yeah, this is basically all you have to see. It's very, very simple. Stops will be below this high volume region and then also below the value area high of the previous day. Now for target, this is where it also becomes interesting. So the obvious target, of course, is this swing high on the left. But since we are looking at a volume approach, our target also needs to be based on volume. So what you can do, you can use the fixed range volume profile to draw or to look inside what happened inside this big push. And then what you will clearly see is that the point of control, so where most people transacted, basically our target or the region that is going to be defended, is up here. And what happened? Price cleared this POC, went a bit higher, but then retraced. We didn't even get to that swing high. But that's why it's important to use the fixed range volume profile for your take profit. It works amazingly. So basically what I'm looking for is an open outside the value area, which is what we have here, rejection of the re-entry in this case, rejection of re-entry of the previous day profile. And what do we get? A clean continuation, and then target is based on the volume profile or the fixed range volume profile of our obvious take profit target. This is one of the strongest don't overthink it scenarios. You just see these two things, look at your target, and that's it, free money. So for the second scenario, we open inside value, retest the POC, and then we continue. This is a simple point of control reaction or directional move scenario. So in this case, I often want to see how price behaves around the point of control, because that's yesterday's most traded price. If price retests the point of control and reacts cleanly, that often gives me a very solid intraday continuation setup. So basically what we are looking for is price opens inside value, we get a retest of the point of control, then we have to look at how does price behave there, does it reject or accept there, and yeah, then we get a continuation. So let's get into it. This blue line represents where we opened. So what happened? We opened, inside value, we opened inside value, like this is the value area high. We opened inside here, then we traded down to the point of control. We got several rejections, 1, 2, 3, 4, a larger one, and then we continued pushing. So the idea here is that you see this revisit of the point of control, you get several successful retests, and then price starts pushing away. So upon seeing price starting to push away, you take your entry, and then the target in this scenario is simply the previous day high. That's where you can take off 70 to 90% of your profits. And then if you do want to, you can leave a little bit running for the next obvious target, which is swing highs or swing lows, in this case, swing highs on the left. Yeah, this is also quite a simple setup, and it happens very often. So for the third scenario, it's basically a failed breakout scenario. We open outside value, but we do not get any acceptance, any actual acceptance outside value. So that usually or basically always means that the breakout is weak. So if we can't do something new in the place where we're at right now, what else is left? We can do the same thing that we did yesterday, and that simply means for price to rotate back through the profile. It might also do something new at the other end of the profile, which in this case would be down here, but that's not what we are looking at in this scenario. Scenario 3 is all about rotating back through the profile. Okay, so let's look at what happened here exactly. So again, this blue line represents the market open of that day. So what happened here? This is previous day profile, and we opened just outside of it, but with a big rejection. This candle has a long wick, and then with quite a lot of momentum we traded back inside the previous day profile. So this is a very quick setup, like you have to spot it quickly, and you take your short basically upon trading back into previous day profile and then trading back into previous day value area high. And for your target, you target a full rotation through the entire profile, and as price pushes lower, you can trail your stop just above the point of control, and then you wait. So yeah, this is a great one because it traps breakout traders. Also quite a straightforward setup as well. You have to be quicker or more alert than with the two previous ones, but once you catch it, you get great rotations, because most of the time you will get a full rotation. So for scenario 4, we are looking for an open above or below the point of control. It doesn't really matter so much where exactly. Then we trade to the value area high or value area low. We get rejected, and then we rotate back to the opposite extreme of the value area. So this is basically an in-profile rotation setup. Okay, so let's look at what happened here exactly. So price opened up here. So, and then we got 3 quite strong rejections of the value area high. So upon seeing this, you can basically immediately start scaling into shorts as soon as we start trading below the previous point of control again, because it means that the highest value we got to was the highest value that we got yesterday, and buyers are not interested in buying up here anymore, sellers are interested in selling up here anymore. Then we trade below the point of control, which means the fairest price of yesterday is now expensive. So you enter your short upon price trading or falling below the previous point of control, and what you're targeting is basically the value area low. Here you can take 70 to 80% of your profits, and if price keeps pushing strongly, you can look for or take the remaining 20 to 30% of your profits on the previous day low. This is especially useful on balanced days and is more likely if the previous days have also been balanced. Think of a market that has been ranging for a couple of days. That's exactly what you continue or what you expect to continue happening. So those are the 4 core scenarios. You do not need 15 indicators if you understand this properly, but I still add a few tools for entry refinement. I use this volume profile framework for context, and then I use EMAs, RSI and the stochastic RSI essentially only for timing my entry optimally. So these are not the main strategy, they just help me refine entries once the volume profile setup is already there. So volume profile gives me the where and why, and the EMAs and oscillators help me with the when. So here we have a short that I took in the past. If you're looking at the volume profile, you should be very easily be able to see what or which one of the 4 scenarios we talked about this one is, but I'm not going to explain it now. Let me know in the comments if you can figure it out. So now the way I use the EMAs and the oscillators to confirm my entries, or rather to time them perfectly. So 3 things I look out for. So we have these EMAs here, EMA 13, EMA 25 and EMA 30. So price trades into these EMAs, we get several rejections and then we push lower. So the first thing is that we trade into these EMAs and we do not break above them. The second thing down here is the RSI. So you will notice that as price was trading into these EMAs, the RSI was approaching the 50 level. It didn't break the 50 level, it was approaching the 50 level. That is the second thing I look out for. The RSI needs to be very close or at the 50 level. And then for the third thing I look out for is the stochastic RSI. The stochastic RSI, I want it to be overbought at the same time as we are trading into these EMAs, as our RSI is approaching 50. So taking a trade based off of the volume profile gives me the where and why, and then these 3 things, EMAs plus the oscillators, give me the perfect time, because I can wait for the RSI to approach the 50 level and for the stochastic RSI to be overbought. So I'm sure these scenarios have enabled you to get a bit of a different view on the market, and if it did, let me know in the comments which scenario you want me to break down in more detail or show more examples. Scenario 1, scenario 2, scenario 3 or scenario 4. I can make a full video on each one with more chart examples. And if you want indicators I use, check the links in the description. If you enjoyed the video, drop a like, subscribe, and I'll see you in the next one.